This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, November 5th, 2015. Euro dollar. So it's time to start looking at the longer term chart in the euro, with the market now on pace to test and retest that critical July base at 108.09. A break below 108.09 will put the focus back on that multi-year low from back in March at 104.62. At this point, look for any rallies to be very well capped ahead of 112, while ultimately only a break back above the 113 area would really delay the immediate bearish prospects for the euro. Sterling dollar. So cable continues to show topping off that 2015 peak at 159.30, with the market putting in a series of lower tops. At this point, a fresh lower top is now sought out just over 155 in the 155.09 area, ahead of the next downside extension back below recent lows at 151.07. Ultimately, a close above 155.10 would give reason for concern, but only a break back above 156.59 would compromise the bearish outlook. Dollar yen. So dollar yen has been bid up in recent trade to some critical range resistance at 121.74, though a break and close above this level would be required to take the pressure off the downside. While the market holds below 121.74 on a close basis, the risk is for additional downside and a resumption of declines back down towards recent lows in the 118 area, below which exposes the August base at 116.12. Euro Swiss. So despite this latest setback in Euro Swiss, the market is still confined to this broad range consolidation over the past several weeks and months, with the market still expected to hold above 107.14 on a close basis. While the market holds above 107.14, the prospect is for an eventual return to the upside, back above the highs that we saw going back to September at 110.50 and towards 112 further up. Aussie dollar. So Aussie remains confined to a longer-term downtrend, with the market rolling back over after stalling out once again ahead of 74 and now on pace for a retest of the recent multi-year lows just over 69. At this point, only a break back above 74 would delay the bearish outlook. Dollar CAD. So dollar CAD is back on pace for a retest of the recent multi-year highs at 134.57. That's an 11-year high, with recent setbacks very well supported by previous resistance in the 128 area. At this point, look for a break above 134.57 to open a fresh upside extension, while only back below 128 would compromise the bullish outlook. Kiwi dollar. So Kiwi is finally stalled out after an impressive recovery run, though the recovery run was classified as corrective, with the market stalling out well ahead of 70 and now rolling back over. Look for this to open the door for a lower top and fresh downside extension back towards the recent multi-year lows in the 62 area. SPX 500. So the S&P 500 is now just very, very close to that record high for 2137, with the market trading to within 1% of that record high from May. At this point, we did see a bearish reversal day on Wednesday, which could set the stage for more accelerated declines into Thursday trade, though with the market unable to reverse to this point, the pressure does remain on the top side. Ultimately, a break back below recent lows at 2070 would be required to alleviate immediate topside pressure. Gold. So gold has seen some intense setbacks in recent trade, with the market now taking out some key rising trend lines support off that multi-year low from back in July at 1073. Still, there's a very strong amount of support in the 1100 area, and while the market holds above 1100 on a close basis, the risk is for a resumption of gains and a higher low back towards and eventually above those recent highs that we had seen back in the 1192 area and towards 1233 further up. Again, only a close below 1100 would compromise this outlook and expose a retest of those multi-year lows at 1073, below which exposes the critical psychological barriers at 1000 further down.